Okay, so now we've left off with the very last small budget leading up to creating a cash receipt and cash disbursement budget, or actually it's called a payment schedule, receipts and payment schedule. Fairly easy to do. We've got all the numbers before. I've brought some of them in for you so that you could keep track without having to go back and forth very far. So let's kind of move in this direction. What's our total sales going to be? Well, that's from right here, total sales, and we multiplied the number we were producing times the cost. And you can see how each one of those lay out. Cash sales is 30% of that number, so we know that's going to be cash we're going to be receiving. Credit sales is 70% of that number. Now we have to look at, okay, where is that coming from? Well, we collect all of the credit sales in the following month, okay? So March credit sales was 342,248. So that is the amount of cash we collect in April. So, okay, let me backtrack that. Our sales, let's do this one more time. Our sales, this is our cash sales, 30%. Our credit sales are 70% of this. So credit sales for April is going to be the 343,248, just like we have it written out here. Take this and make it go away because I'm not ready for that. Now, if you look at here, this lays the schedule out right over here. This is telling us how much we collect from credit sales that month, and we collect 100% of credit sales the month after. It's kind of hard to lay out. So now I can use this 342,228 here. So March's credit sales were 342,248, and that's the amount we collected. It just so happened that April's sales were also 342,248. So that's how much cash we collect in May. And then for June, we're going to collect May's accounts receivable or the credit sales. And that goes right here. Now, I know that might be somewhat confusing, but hopefully the arrows help. So if you look at this, total cash we received, you add these two right here, add those up, you will come up with the total cash received. Now we're going to look at the other payments we had at that time for materials, and they're paid for the month after we purchase them. So for March, we charged 200,500. We didn't pay for that until April. We charged 198 in April and paid for it in May. And we charged 201,500 in May and paid for it in June. So now we've set that up. Don't lose these numbers because we're going to need them when we get to the budget. Now I've kind of laid this out, and this can be confusing, so just hang loose. So we have a beginning cash right here of 40,000, and that also happens to be our minimum. What happens when you're doing these is you have to set, and companies do this all the time, we have to have a minimum amount of cash to operate. If we don't have that amount of cash when we get down to the end of the month, we're going to borrow it to make sure that we have that amount. When we have over that amount, 40,000 or whatever is deemed the limit, then we're going to pay off the short-term loan we got to bring that cash up. So let me show you how that works. So we begin with 40,000. We had cash receipts of 48,925, and that comes from the cash receipts. We had total cash available for this month of 528,000. Of that, we spent raw materials, direct labor, variable overhead, sales commission, sales salaries, administrative and general salaries, dividends, not yet, but if you notice up here, we have dividends scheduled for May. So just keep that in the back of your mind. We had loan interest of $120, and that's because we owed $12,000 on a short-term note to get this up to $40,000, all right? And it's at 1%. So the interest loan is $120. We have a long-term note interest we paid, and that was back in the general of $4,500. So we had total cash disbursements of $433,579. We get this by adding this totally up right here. So we have a preliminary cash balance of $95,346. I'm over $40,000. I have this $12,000 short-term note out there. I'm going to pay it. So I take that out of the cash and end up with an ending cash balance of $83,346. Then we start the whole process over again by using the same procedure that we used for April. Only now I start with $83,346. I have cash receipts from the cash receipts schedule. Gives me the available cash. I go right down the budgets I created, taking the numbers off. And now I come to dividends. Well, if I find out I'm going to pay $10,000 in dividends, there's no loan interest because I paid it off, right? I still have the long-term note interest. This gives me total cash disbursements of $440, and I have a preliminary balance of $124,295. Not paying anything off, so that's my ending balance. Now for June, let's get all this out of the way. Again, you start with that balance. You take your receipts, gives you your available. Looking at all the other budgets, you plug that in. You had no dividends and you had no loan interest, short-term loan interest. But if you come over here, you find out you have budgeted for June to buy $130,000 worth of equipment. So that gets plugged in. Now I have cash available of $592,948, and I have disbursements of $56,700. That leaves me with $23,248 in cash. Well, I have to have $40,000. So I'm going to borrow enough money to bring that up to my ending cash of $40,000. And that gives you all the information you need to do an income statement. And I've given you check figures here so that you know where you're going with it and making sure you're in the right area. Even if you didn't know what sales are, if you multiply this out, plug that in, you're going to come up with a sales figure. Okay. All of these numbers are available to you in the other, from the cash budget and from the other receipts and things of that nature. Here's that income tax you're going to pick up on. Again, a lot of these you can almost back right into. Once you get this done, then you're going to come and you're going to do a retained earnings statement. I've given you the beginning, retained earnings. I've actually given you the ending. So you should be able to fill this in between, and most of your information is going to be on the, hold on, it's going to be in the cash budget and in the receipts and payment schedule. So now once you get the retained earnings, remember you're going to take this ending retained earnings and it gets plugged, and I do this right now, right into retained earnings right here. And then you're going to do your balance sheet. And I've pretty well given you a lot of that information or told you where to look to find it. These are your balancing numbers. And this is how you do a budget. It's kind of fun. It's almost as much fun as doing a worksheet for adjustments. So thank you much for your time. Please email and ask questions if you have any. Thank you.